Portfolio Manager at eNCA Capital, Martin Smith, joining me now to unpack those numbers. Martin, as always, thank you for your time this evening. So let's start with your general markets. I'm wondering if investors are taking stock of the cost of the rioting to various businesses across parts of the country, hence why we're seeing the JSE ending the day over, or rather the week over almost 1.5% in the red.
Yeah, I mean, it's obviously the thing on everyone's mind at the moment, what the impacts of this week have been on markets and the economy. And I think largely the markets look past it or seen through it. If you look at where our bond yields are, if you look at the currency and even the market movement, I think people have largely looked through it. Foreigners have looked through it. And I think the maths of it is obviously that there are some affected and some not, but on the whole, not a massive event actually in the way that the market viewed it. The other side of things, away from the mathematics side, is the sentiment. And this is what we're going to have to find out long term. How is this going to affect the sentiment towards South Africa as an investable universe from foreigners and from South Africans alike to put money into South African-run businesses? So that is something from a sentiment perspective, which we'll need to see over the sort of coming months and years. But from a mathematical perspective, I think people have largely looked through it.
Right. What about the rand, Martin? Initially, when these protests started, we saw it lose quite a bit of ground against major global currencies. It seems as though it's clawing its way back up, showing a little bit of strength despite what has transpired throughout this week.
Absolutely. I mean, it kind of touched, what, 1475 on about Wednesday evening. I know that because I had a few clients call me after hours. But I think it's a couple of things at play. One is the stronger dollar. The dollar was quite strong throughout the week, and as well as what is happening in South Africa from a kind of right perspective. So it's a combination of the two. And as we see things abate in the country as the week has gone on, we've seen the rand strengthen. But again, we need to factor in the fact that the dollar was quite strong this week as well. So all in all, we're not massively weaker than we were at the end of last week, right?
Right, absolutely. Let's get into those companies that have reported on the unrest. We had Massmart, as I've read earlier, saying about 14 stores were impacted. TFG, 190 stores looted and destroyed. And then, of course, Pepkor saying 9% of its stores were affected by the rioting. I mean, the general retailer space is a really, really tough one at the moment, and it's going to take some time before they recover fully from this, isn't it, Martin?
Yeah, absolutely. And I think you have certain stores that were affected, like you mentioned, the clicks and the like, and that'll have a sort of 2 to 5% effect on them if you look at kind of what the market's done and kind of factored that in. But the ones where there'll be proper damage is where there was actual physical property, so the property companies, where there was damage to the actual underlying assets. That's where the real damage is done. But if we look at it, so you look at, for example, Growth Points and Redefine, it's 1 to 2% of their assets, and then you look at insurance coming in. So, like I said, obviously it's an incredibly sad situation, and it is a frustrating situation, and there has been massive damage done. But again, from a market perspective, people are looking largely through it.
Right, Martin, that's all the time we have for. I was hoping that we'd get into Richmond, Johann Rupert's luxury goods market, back to sales of pre-pandemic levels, which means people are spending lots of money on some nice luxury goods like Cartier and Mont Blanc, but that's a conversation for another day. That's Martin Smith, Portfolio Manager at eNCA Capital, giving us a wrap of the markets day.